All right, all right. Good day to all. We are here Monday, November 6th. And with the movement we're starting to get here in Bitcoin, seemed like a good day to do an update and take a look at where there might be some opportunity. So I'm here again with my 4-hour Bitstamp chart, Bitcoin to the dollar. And this, when we start to go into corrective action like this, it's always a good idea to step back to the longer time frames so you get some sense of perspective on this. So it's getting very tricky, down at the 60-minute and below, down to the 15-minute. Very, very tricky to put a good count on it. So when that's the case, I really want to encourage you to step back from it and say, okay, what's the easiest thing for me to see? What is the most obvious count that jumps out at us and where we can put some good probability entry points in and look for opportunity. Now, it's not surprising that we're starting to get some corrective action here. We've just pumped up to 7,600, and we've had mostly shallow corrections along the way from call it 5,400 up to 7,600. So 2,000 plus dollar move without much corrective opportunity here. So the fact that we're getting some now as we come into the fork that's coming up, no surprise here that we're starting to get some softness. And now the question becomes, are we just setting up for opportunity here to get long again? Certainly looking at the chart, there's nothing to suggest otherwise. So we don't want to be shy about getting long just because the price has gotten so high. It's you need to be more objective about it. What do we see? Where are the high probability entry zones where we can look to get into the market here and manage the downside? So the market would prove us wrong or prove any count that we were working from wrong with a reasonable amount of risk tolerance. So as we sit here looking at this, this is the simplest count to put on it. So from this last significant low here down at what would we call it? Let's call it 5,200-ish. This is the easiest count. So if you're just looking for the subdivision that we would look for, there are some reasonable arguments here that this could end up being relabeled. This could be a 3, 4, 5 here. I'm inclined to stick with this count until proven otherwise. So right now I've got key levels here. Of course, what I have labeled as a one wave high here, wicking the median line. Certainly that's a significant pivot. We get a second wave here after a very clean ABC. So this all looks relatively straight. To really textbook Elliott wave trading. We're getting subdivision within an extended fifth. So here we sit with a very clear 1, 2, 3. And if we're going to just follow a traditional Elliott wave count, we'd be anticipating the fourth. We'd be anticipating it. We're just looking at probabilities. Ideally, we'd be around the 38, 50 at an extreme. We do have our wave 1 high here of this larger count, but within this degree, here's our wave 1. So, we want to be conscious of both of these as these are important pivots, and we can see the 61865 here. So, if we're going to move outside of this pitchfork as we have it drawn at the 200%, well, at that point we may be, considering some relabeling. Excuse me. Right now, this would be the easy trade. This is just right into the pocket. Okay, there's the 38. Right, very common target for a fourth. Algos will be all over the 50. We know they're going to be buyers there. So this is the easy one. Now, entries into Bitcoin have not been easy, right? So it's been a long, from this last swing low here at 5,600. So for that last 2,000 point move, $2,000 move, there have not been many easy entries here. It's been somewhat unconventional in terms of the wave count, which we'll look at as we go to a smaller degree. But right now, there's no reason to anticipate anything other than a traditional fourth wave to come in here and find support. Either we're going to find it here on this edge. I think this looks more likely given the the degree of uncertainty that we have in the market, and what my estimation is that we have some people that are perhaps overextended or are enjoying some substantial gains here, and they'll want to look to lock that in. So likely those stops will start getting hit, which can drive the market lower. But that doesn't mean we sit down here with an open order just waiting to get long. That means we want to be certainly conscious if we're going to get down to this level about what the price action looks like, and that's where going to a smaller degree in a smaller time frame can be helpful in trying to pinpoint that timing for entry. So let's consider this as our longer term, the place that we would love to find a reasonable entry here. But again, we gotta go based on what the market is offering us and what kind of price action we can see on a smaller degree. So let's go down to the 60-minute next and take a look and see here. So here's that count now where you can get a little bit more detail on it. So here's the 1-2, and then again into the 1-2. Now currently I have this topping based on the current structure that we see here, and perhaps no surprise that we're topping just as we get a few dollars shy of the median line. This kind of hitting clustering action at the median line is very typical of what we'd expect to see. So now clearly we're into some sort of corrective activity. Now the question becomes, are we going to go traditional and look for a relationship of A to C projected from the B that would be more typical? Here's the 100%. So if I take the length of A projected from B, here's my 100% here. So this is a contender. Here's my first algo target. Let me blow that up a little bit so you can see this. So if I go from my A wave here, let me bring this down a touch. So if I've got a good A in, and this is my B, and this all plays quite nicely, we'd be looking for the C down here, so we get this buying zone where we might have first entry positions. Based on, we've got our 23.6 for the shallow fourth. We know that a high percentage of force will be between the 25 and the 38.2. That's the highest probability zone. Then down to the 50. So we can carve this out. Here's the 23. Here's the negative 23, which is the algo target from this pull, from the B high. So we get this, and note that it's right in sync with the Vegas wave. Right, so we get this nice buying box here between 70, 64, and 69, 84. So reasonable place to be looking for maybe a first toe in the water here. But again, we want to see evidence of the market stabilizing there, and maybe look for at least an initial punch out of that, so that you might see some sort of price action that would be similar to this, rather than trying to buy the dip precisely on the low. You might wait for a little push out and then try and catch the second retracement maybe on the 15-minute. That would be the safest way to play it, because we can look here and say, well, while this is potentially an area of support and it's technically a likely place for the algos that sold here to be taking some profit, we also have high probability zones down here. We get the negative 618 intersecting with the 233 right here. Then here's our 38, and here's our 100%. So this is really a question of, if you were comfortable being a buyer here in this zone, and we get some stabilizing price action there, it looks like we might turn out of that. That would be a place to maybe take a partial, and then it's a question of, are you willing to take the drawdown down lower to this outside edge in this pocket down here? We're talking about, if we split the difference here, let's call it 7,000, taking that all the way down to 6,600 potentially. That's trader's choice, and what kind of size you're putting on. For me, I wouldn't necessarily ride it that far down, because there is potentially it could really start to accelerate. So I wouldn't want to be riding that down. If this fails and we take out this swing low, why ride it down? I'd rather take the small hit here and then look to reload if we're going to go down here, rather than absorb and then to be adding to a loser, right? So that's always kind of a tough call as to whether or not you're averaging down makes sense, right? If you're really anxious to get into the market and you're willing to average that down, that's not an unreasonable stance to take. But in my experience, I'd rather take the very small loser, and I'm very comfortable going back at it 2-3 times if need be to get the entry and the price action that I'm looking for. So for me, I wouldn't ride that down. I'd rather take a small loser here and look to re-enter if it's going to come down. And the same thing, once we get, now we've got a fairly wide range here. Once we get into that price range, can I get a good read on what's happening maybe on a smaller time frame to give me some sense of the kind of price action I'd look for? And if we indeed have an A, B, C, I want to see that C wave give me some subdivision to show me a completed 5-wave structure, potentially an ending diagonal or a straight impulse that would line up with this zone. This is a buyer here. You're taking it off of this technical data and the experiential look back, where we can see that we've had these continuous truncated C waves where they haven't gotten to new lows, or we haven't had traditional ABC corrections into a typical fourth wave. And maybe that's because throughout this whole move there was just such an appetite to get long in Bitcoin. Now, with the fork approaching and a lot of profit likely in the market that wants to be protected, you have the potential for this to start to accelerate lower. So I guess my point is approach with caution here. No need to be loading heavy here. You're not going to miss anything. If it turns here, if we get this price action, which is consistent with what we've seen, there'll be opportunity. There'll be plenty of opportunity to get on board. Right, so don't be overly aggressive just because you're seeing the first pullback here. This pullback, again, when in doubt, refer back to the 4-hour. Okay, and look at that and say, well, what makes more sense? Where I'm much more comfortable being a buyer here more aggressively than I am up higher, trying to catch that early turn. So use your best judgment there, and keep in mind that you won't miss anything. There's always an opportunity. There's always another pullback. Always an opportunity to get long. Let's go down to the 15-minute and see if we can get some perspective on this. Now this has gotten kind of squirrely, particularly in this zone here where we have these somewhat mixed signals where we can see we're getting 5s following 5. So back here, this got a little difficult. Here's that case that we've seen, the truncated C wave. We get this 5-wave completion pattern here to finish the diagonal, so we get a good ABC, and then we go into potentially what I currently have labeled as a third. We could have topped here. It's very hard to make a call on that at that point, but then we finish with this 5-wave sequence, which has me leaning towards an ABC into a fourth. Then we finish with this nice impulsive structure to complete this fifth here of a third, right? So potentially we have that 3-wave in, and now we're just looking at the subdivision here. Can we get, are we going to go traditional, or are we going to stay with this pattern of truncated C waves? Well, right now I would lean towards more traditional because we don't have much subdivision here, and I would discourage you from going below the 15-minute. It gets way too squirrely there, way too many count changes, way too much relabeling. Algos live on the 15, so I would stay right here. So again, just keeping it simple, right? Elliott aside, if we think a corrective move is underway, well, we've gone to and through the 61865, but the 7-6 holds it. That's very typical for a B wave. Very typical. There's a push for new highs. It fails, so we come down to correct. Now, are we getting any subdivision here? You could probably carve something out there, but it's not easy enough to see to where I want to speculate on it down on a 5-minute. So let's let it play. Here's the obvious target. Here's the first one. What kind of price action do we get when we arrive at that level? Do we get any subdivision? We want to see at least something along these lines. If we're going to go down here, I want to at least see some evidence of a retracement. Yeah. Hang on. Of a retracement back this way. I want to see that. and then I want to see some follow through down this way. That's typically what we want to look for to confirm that we're going to finish this in some sort of 5-wave structure. So if we do that, well, are you a buyer here just because the algo target is there? That's so here. We may be getting that right now, right? So as I'm filming this, as I'm recording this, I should say. Maybe there's a fairly good spike right there. So maybe that's the 1-2, and we look for the 3 to come back down, and then the finishment. So that's where you build more confidence. If it's going to finish it in a 5-wave sequence, then we can get some sense of degree. So we can start projecting from the 1 to the length of the 1 from the 4, and if we get that clustering effect, right now we don't have a great confluence zone. We have fairly wide targets. So it makes me a little less easy to take one simply because I'm at an algo target or simply because I'm at the -618. These are, it's volatile as hell right here, right? And so we have the potential for this thing to drop fairly hard. So be precise. There's no reason to rush a trade, no reason to force anything. Let the market show itself. And if we're going to get that 5-wave sequence, we'll get confluence down here. It will start to show up, and that will give you more confidence in your buy and where that sits relative to the longer time frames. Right? So when in doubt, pull out a time frame or two and get some perspective and some context. So if we take this out to this 4-hour, so we just want to see an ABC, right? So at this level, that's all we're looking for is a nice clean ABC. And then can we fine tune on these smaller time frames to give us more confidence? Here's the sweet spot. If we get it, yeah, you certainly want to be positioned to take advantage of that, right? But nothing says that has to be that's a guaranteed winner. Nothing says that. This is all laying up perfectly, but your stop needs to be there, just as strongly as any trade that you take, right? So we don't just load it here and be sloppy with the stop just because we're anxious to get long Bitcoin. The stop sits. You've got trading rules relative to your account size. Those don't change just because you love the look of the trade. First assumption is you're going to be wrong. That's always should be, where am I wrong? And if I'm wrong, what's the impact to my account? Can I withstand that? Or is my size, am I too heavy? Or am I too light? Can I withstand that? Do I want to be more aggressive there? So that's case by case. All right, that's 17 minutes. I'll wrap there on Bitcoin, and I'll be back with a couple other things to look at in another video. Okay, that's it for now.